Hey guys, this is Trading Bruce, and today we're going to look at 3 stocks under $50 that you should consider for your portfolio. And what we're going to do, we're going to look at the financial services sector. I think that's going to be a good sector for 2026. And why do I say that? Well, of course, we know interest rates are coming down. Fed's going to cut rates, or we assume the Fed's going to cut rates. We have a backdrop of deregulation in the industry, which is really going to help. All the AI components are really helping a lot. And then we also have the backdrop of M&A activities going to be picking up. And of course, banks, financial institutions are well situated for that this year, I think 2026. So we know we want to have some exposure there. Of course, we've got the techs and all the other industries, but I want to focus on financials today. And we will start out. I've got 3 names here to consider. You're going to like them, I think. They're lower price. We can get a lot of them. If you do covered calls, if you do the wagon wheel strategy, things like that, these can work, but maybe not exactly. I tend to like a little bit higher dividend type paying stocks for that. We'll get in that in a second, but I'll try to keep this short, so let's jump right in. Here is the XLF that we're looking at. Now the market has pulled back today, and again, that's what made me think of this, and I wanted to touch on some names that are kind of off the beaten track. So we could say, let's look at Goldman Sachs. Great looking chart. What's not to like about that? And that's fine. That's almost a $1,000 stock, $984 today. What's not to like about Goldman Sachs? And again, you could use that for the wheel strategy. You could sell some naked puts down here, cash covered, whatever. But again, we're going to get a little bit deeper and get into some names that we can all put a lot of in our portfolio, hopefully. So the next one I want to look at, sorry about that, I got a Zoom meeting ending. So if we look at another one of the large, money center banks, etc., Goldman Sachs, Morgan Stanley, great looking chart. Again, we're going to go deeper in that. So let's drop down. We're going under $50 here and even lower. So the first one I want to look at is LendingClub. You may or may not be familiar with this. Good looking chart. I've got a super simple chart layout here. It's a 20-day, 50-day, 200-day, and I can get as detailed as we want to, but I'm trying to keep this simple. Basically, we want to stay above the 50 ideally. Now we've dropped past it a little bit. That's, this is a $20 stock, $19-20 stock, so you're going to get more volatility, and bear that in mind with these stocks. These are not recommendations. These are just things to consider, right? So I like to have 3 reasons to buy a stock, and the first one on LendingClub is they have a bank, but they also have a network of ways that they can get personal loans and things like that. That sector is pretty lucrative, as you can imagine, right? So first reason, I like the sector, but I like the subsector when you get down into the kind of direct-to-consumer type loans, right? The next reason is and I'm looking up here, I've got the stats. 1-year earnings growth is 44.9%, so they are really, really crushing it on earnings. Our RSI is 60.8, so it's a good RSI. You want to be under about 70. Anything over 50 is starting to turn bullish, and this is, broadly speaking, right? So 3 good reasons to consider LendingClub.com. The next one we have, because of, we want to kind of be in the financials from a defensive diversification standpoint, away from all the tech stuff. We all want to have the tech stuff, right? Again, this is something different. The next one, I like gold and, the metals, of course, metals and mining, etc. So the next one is gold, G-O-L-D, gold.com, right? And this one is anything in that sector, Agnicto, AEM, there's IM Gold, all that kind of stuff. They've been really good. Again, I'm trying to get one. And this one came under the wire here at about $43. I'm trying to get stocks that are in the financial services sector, a little bit different than a traditional bank, right? So good defensive sector. It's good to have some money in gold and defensive names, right? 1-year earnings growth rate 17.2%. Pretty strong, right? This has strong money flow coming into it. These all three have strong money flows coming into them, right? And the third reason is the insiders hold 25 point, again, I got my stats up here, 25.35% insiders holding this pretty strong, right? I like that a lot. And the third one is something, again, we're going to go a little different here. EasyCorp, you may or may not be familiar with this. And if my chart will load here, okay, this, I've been in and out of this for a while. I currently do not have anything in it, but I'm looking at this. All three of these names have earnings coming up, so be aware of that. Again, I'm talking big picture here. So EasyCorp, and you can see the symbol EasyPW, that's actually Easy Pawn, and this is a chain of pawn shops. It was started in Austin, Texas, and they're United States, Central America, Latin America, that kind of thing. As you can, and regardless of what you think about pawn shops, I'm talking about the stock from an investment standpoint here. Good diversification into the financial sectors itself, but again, it's another subsector that is very profitable from a stock standpoint, right? They have a 3 years earnings growth rate of 40.9%, so they are really doing very well as far as that from that standpoint. It has a short interest of 11.5%. That's pretty high. Anything over 10 is, kind of watch this. That's good. Short interest is good for a burst higher. Now, all three of these names I would consider for a trade, but I would consider also just kind of put it away, forget about it, honestly. These are $22 stock. These are low enough price stocks that we can do that, and we can, buy. You can buy we can buy options on them, etc. But with a $20 stock, $20, $30 stock, I would rather just buy the stock itself. So again, good name, good. All three of these are good charts. This EasyPW, EasyCorp has an RSI of 67. Not bad. The RSI has to get higher, meaning the stock is moving in the right direction. If it was 35, we'd be down here somewhere probably. So anyway, good name all the way around. The earnings out here, and I forgot to show you on the other ones, I will real quick. So the earnings on this one are coming up around, it's not confirmed, you see the question mark there. This is the Thinkorswim platform on 2/4. I'm recording this on January the 20th, so this is on February the 4th approximately. So anything can happen on that, right? With earnings, we never know. Here we got a big gap up, here we got a gap down, etc. So again, kind of think about this longer term as the concept, and when you consider these stocks. I'll go backwards here on gold. Now gold, we've got earnings coming up out here. I don't have enough data on the chart to give us much more than that. February 5th approximately, that's actually confirmed. And then on LendingClub here, it's coming up, I believe it's next week on, yes, next Wednesday. Again, good looking chart. So keep in mind, with all of these that, it's kind of the catch-22. Do you want to buy them before earnings season or before the earnings event? If you feel pretty good, absolutely. You get a big pop if the earnings are great. If not, for example, this right here, you see that gap right there? If the earnings are not good and you buy before earnings, obviously it postpones your hold time, right? Or it extends your hold time if you're going to stay in the stock. There are things you can do. I've got other videos, and I'm going to be making other videos about this as well, how we can hedge around earnings and things like that. Pretty straightforward. So keep all that in mind. I do have a bonus one for you, and that is Wisdom Tree. Wisdom Tree looks pretty good. Now, the reason I did not include this, and again, I wanted to have lower price stocks, $15 stock, much easier to trade and or buy, accumulate positions in these kind of stocks, these kind of names. This one is really moved. It does have earnings coming up out here. Again, this is our bonus one, which I really am not including in the list because it's on 1/30. That's next Friday. And we'll keep an eye on it, but I would rather see this thing pull back, to then go higher. But again, on any of these names, especially if you've got a $15, $20 stock, you buy it here, starts going down, maybe you add to it as it comes down. There's a 200-day moving average. Everyone has different ways to handle these things, or maybe you just stop yourself out and then find something else and come back to this at some point in the future. Lots of ways to do that. I've got other videos on that. If you're not familiar with me, I'm Trading Bruce. Again, I've been trading professionally for over 35 years, actually about 37 years. So I'm here to help you guys any way that I can. That's why I want to put these videos together and keep them pretty short. So with that, let me wind it up. I'm going to put a link down there how you can find me. I do these all the time. Always check my YouTube channel, and if you want to get more detail, more information, you can find me at simplertrading.com. I'll put a link down in the description below. But for now, that's it. I told you guys I'd keep it short. I want to keep it at 10 minutes, and we're right on the number right now. So have a great rest of the day. I will have another video out for you guys soon. Thanks. Take care.